Hello everyone and welcome back to another video. Please do subscribe if you have not already, and let's get right into it. Looks like Tesla is tanking today on October 3rd, 2022 just because of deliveries that it said that it reported over the weekend came in lower than expected for the quarter. That being said, it has tanked about 7% today, down to about $245, but still we see a price target, average price target I should say, of about $307 for a 25% upside, which makes it a moderate buy based on 18 buy ratings, 6 hold, and 5 sell. Out of 29 ratings, those 18 make it a moderate buy. So with that being said, let's look at the smart score. If we can grab it really quick, it's a 5. So that being said, Tesla I do think is another outlier to the smart score. Anything under 6 determines, or should have determined if it's like worthy or not to invest. I would say that it's worthy enough to invest. I've invested a few times and sold it a few times. I probably should have just held it because I probably would have made way more money if I just held on to it. Because seller's remorse, as far as wishing that you held something that just kept going up. But I used that money for different things, so all in all, I guess I can't really complain too much. As of the end of 2021, Tesla had about 53, let's call it 54 billion on top line revenue. That's really good. And just look how much it skyrocketed all the way from 2016 even. It's up 7 times. So let's see what their total net income was about 5.6 billion. That's enormously profitable compared to even 2020, and then way more than the years prior. Elon Musk really did come out with a top financial plan for them, and it really did work. Let's look at their balance sheet. So they have about 17 billion in cash on hand. That's what you want. You want to see that, especially when you have like an auto empire that he's trying to build. You need as much cash as possible because even he has said that a lot of his workings just burn cash at Tesla, so they really do need it. Let's see, total current assets of about 27 billion, total current liabilities of about 19 billion, very good working capital there. Total long-term lease has actually gone down. It used to be 11 billion back in 2019, and it's down to about 5 billion. This is a really good CFO. I don't remember who the CFO is of Tesla as of this moment, but it looks like they are on a steady, debt elimination, mission. So it just seems like that's a really good thing that you want to see. You want to see the debt slowly going down. We'll take a look at how much they actually are repaying and how much they are issuing at the same time on the next tab, which is the cash flow statement. So it looks like this isn't loading at the moment. So give me a second. Let me try to refresh it. But this is where we should be able to see certain things like the like how many shares they buy back, how many shares they issue. We can see how much debt they buy back and how much debt they issue. We can see how much cash they use for acquisitions, for buyback, which actually I'd be interested in looking into. I don't think Tesla buys back much of its own stock. They do not pay a dividend. I know that they're one of the few car companies that does not pay a dividend, even though they're, again, enormously profitable. I would actually expect that if Tesla ever did pay a dividend, they would go up astronomically because then they'd have to have DCF incorporated into their models. So if we look at it, again, we start with the high net income. Looks like acquisitions. Tesla really doesn't do a lot of acquisitions. Looks like long-term debt issuances. They issued quite a lot, and they also repaid a lot as well. 2021, 14 billion. Looks like equity issuances. They took advantage in 2020 and issued about 12 billion worth of shares when previously it looks like the high is in the 1 billions. Repurchases, looks like they don't really repurchase a lot, but they do. This is the most they repurchase. Looks like they consistently repurchase as of the last 3 years, and it has consistently gone up as well. And again, it doesn't really look like they have anything else going on here, but this is a really good sign. This is a really well financially oiled machine for a car company that is all electric and has 4 models. So let's look at a portfolio of Tesla. We have data going back to July 2010 when it seems like they had gone public most likely, and it just blows it out of the water. Like your ending balance for the S&P 500 would be about 35,000, which again 11% is nothing to sneeze at. That's what you hope for in a portfolio return of S&P, like over a given time span that's long term, typically like 10 years is like 10%. But then you see 53% for Tesla, and it's just a monster. Like look at that, almost $1.5 million compared to $35,000 for the S&P. And if we look at some of their good years for annual returns, 2020 was just astronomical for Tesla. Like 344%, that's pretty good. 45%, that's really good. But then 743%, you can't beat that. And then it went all the way up to 49% last year in 2021, making it go up close to $2 million worth of shares. This year it's down about 24%. So that being said, this is still a really good company, and I will continue to probably buy and sell it as long as I live. So with that, I hope you guys have a nice day and see you later.